Tuesday's market SITREP here at Top Gun Options. Matthew Buckley, call sign Whiz, the founder, CEO here at TGO. And futures are seen lower. Had a rise yesterday, but we got some information out of China that was kind of mixed, actually. The HSBC final manufacturing PMI. So we got the government's PMI over the weekend, and you can choose whether to believe that or not, but showed contraction again. 49.4 was the number, looking for 49.7. 49.7 was the last one. So any reading below a 50 in with PMI means that there's a contraction or recessionary-like conditions. So it depends on who you talk to and the headlines and what you read. But it kind of sort of feels like some of the stimulus measures that the Chinese government has taken are starting to grow some roots, albeit slowly. So, as China starts to maybe potentially turn around, and for every sign of data I can show you that says China's turning around, I can show you a piece of data that says China's imploding. So let's just say that they're skimming along the treetops here, with the real estate, really bad real estate issues and potential credit issues. But the Eurozone, so Mario Draghi is going to be giving us a press conference tomorrow, and we'll see what happens with interest rates, or actually a QE like quantitative easing out of Mario Draghi, and whether he thinks that it's time to pull out his own bazooka over there in the Eurozone. So, there's some numbers out of Germany and France as far as PMI that weren't necessarily light your hair on fire. Okay, so Tuesday we're looking at factory orders here in the United States and vehicle sales throughout the day, and then as I said on Wednesday we're going to be looking at trade numbers, non-farm productivity, and our final services PMI, also ISM non-manufacturing PMI. That'll be an interesting number and potentially move our markets. HSBC services PMI out of China. And then on Thursday, as we talked about, Mario Draghi giving us a, hey, here's what I'm doing in the Eurozone. Weekly unemployment claims out of us. And then obviously the big numbers out of us on Friday, non-farm payroll and our unemployment rate. So as we talked about, semi-upbeat news out of China. But again, it depends on who you talk to. I mean, you take a look at the headline on CNBC, the cheerleader website, and they say that it looks great. And then here on Zero Hedge, futures fail to rally despite weak overnight data. Okay, so they're saying that the print is out of the IS or the Chinese HSBC PMI is down for about the fifth month in a row, and then you can see over at Reuters and CNBC that they're cheering that there was good numbers out of China. So you have to take a look at the numbers for yourself and look at them holistically. Like I said, it's kind of a Goldilocks numbers out of China. Not too hot, not too cold, and they're skimming along the treetops. Two good weekly options trades going down range right now. We have an iron condor on Goog that we put on yesterday. That's up $300, and we have a Twitter bear call spread that is up $750. So in 1 day of trading, we're looking at a $1,000 gain, almost $1,100 gain, which is my mission objective for a week in the weekly options model portfolio. At least $1,000 a week average in the model portfolio. So that's pretty good. And Monday to hit our mission objective. So, but obviously it's Tuesday and anything can happen. Twitter's actually indicating a little bit lower, so that'll help that trade out. And then Goog got hammered over the weekend, mainly because of some Eurozone rulings on the right to be forgotten type of thing. So Google's got to implement this privacy policy that I don't think is going to impact them monetarily too much. If anything, it's going to help them. Okay, so I'm long Google here, and we just have a nice little iron condor for the week. Okay, folks, got to go. Happy hunting. Make sure you hedge, and I'll be back with Wednesday's market SITREP here at Top Gun Options.